bring in Jerry Parker, joining us this morning, CEO of Chesapeake Capital, help us take a look at some of the existing trends in the marketplace. Jerry, good Tuesday morning to you, and thanks for sharing part of yours with us. I feel like we always kind of jump off, and a good place to begin is with the indices continuing to focus on the positive, discount the negative, 2 steps forward, 1 step back, the trajectory to the upside just off all-time highs, but not necessarily invalidating the trend up at this point.
Oh, not at all. Shrugging off any kind of bad news. Yesterday, the bad move in the interest rates and the weakness in the bond market is staring everyone in the face, and everybody's kind of ignoring it. However, I would point out that since we do monitor a lot of stocks, individual stocks, boy, those look a lot different from the index. So you still have a few stocks carrying the S&P and making the market look probably more healthy than the underlying stocks would say.
Well, kind of wondering about that, Jerry. You've got the big names like Nvidia, right? Is that's kind of what you're referring to in terms of things being a little bit overdone? Some are arguing at this point.
Oh, well, as a good trend follower, I don't like to look at things in that way.
I like that.
Overdone. Yeah. Overdone can get more overdone, just like the cocoa, and some of these big trends we've seen. So not so much, that. It's just more the underlying stocks, the stocks that are not some of the biggest in the world. They're just having normal pullbacks and quite a bit off their highs, I would say, on average.
I like that. Overdone. I always say, RSI, for example, relative strength index, some of these studies that get overextended does not a sell signal make by any means, right? And that these trends can continue a lot longer and further than we think as traders, we think is possible. So the idea being there, again, that you're just sort of looking at these individual stocks participating in the trend, hope it continues, but also with sort of a watchful eye on the indices because it sounds like, wish that it was a little bit more broad-based.
That's right, because sometimes I'll come in and look at the S&P and it's up on the day, and most of my individual stocks are break even or down, or vice versa. So it's two different markets, and everyone tends to focus on the S&P and trade the S&P. But if you're owning the individual equities, it's not going to be that good. That's why everyone loves the S&P, because it keeps going up and outperforms the choices that people are making.
Jerry, let's talk about another one of the individual equities that you watch, which has and continues to be going up, up, up. It's not just Nvidia, right? You also, I know you're a fan favorite of Eli Lilly.
Amazing. Those two, some of the best trends of all time. It just goes to show you the benefits of being a long-term trend follower and not being eager to get out of a trade, and then not really needing a lot of explanation sometimes of what's going to happen in the future, and trying basically as a trend follower to ignore that information, because a lot of times the market is the news from the market is saying, hey, it's overdone. And the silliness of last few weeks of the sell-off in Nvidia, which was a blip, almost nothing. You could have gotten out of these stocks many times over the past few years if you would have paid attention to these small blips down. Doesn't mean this may be the one, but you got to stick to your rules and your system.
Okay, Jerry, I've got to slow you down for a second there, because for those of you who don't know, I mean, Jerry is truly a legend in his time in many ways, one of the original turtle traders and really an expert at identifying trend. And Jerry, I got to back you up. You just said that these are the best trends of all times. You're talking Nvidia and Eli Lilly, really the best of all times?
Some of the best.
Okay.
I'll leave some out. Sorry about that. Some of the best. I haven't looked at it, but certainly Eli Lilly, kind of incredible move, especially in the ways that trend followers look at these moves. So yeah, it's great examples of what you do and how much money can be made from a few small decisions. That's why these decisions are so critical. You can be right 90% of the time. And follow your rules, but if you don't follow them 100% of the time, inevitably, these are the type of moves that you're going to kind of screw up and make a lot less money than you would have.
Absolutely, and proof positive, again, of what you've talked about in the past with us, of get out of your own way as a trader, right? Just identify the trend, participate in it, hope it continues. Don't start looking to kind of take some off here or there, or start to make up new rules as you go. Just, again, these markets can continue a lot longer and a lot further than we like to think they can or hope they will. But lastly, Jerry, just short-term versus long-term, a quick thought here, because what I'm noticing in crude is you've got kind of range-bound contained price activity on that bigger picture daily chart over the last year or so. But when you look at the price activity you've seen throughout the month of June, over the last 5 weeks or so, quite a well-defined trend up from 70 to now 84 overnight. How do you kind of pair back traders when they're talking about, hey, I want to kind of trade that 5-minute candle chart or that 60-minute candle chart? What's your advice there?
Oh, wow, that's a lot of competition in that space.
Okay.
And stick with the long-term trends and stick with the idea of being willing to take a material drawdown, which most people don't want to do. Put yourself in a situation where you're going to be, unlike most other people, concentrating on the long term, not being bothered by the givebacks and the retracements of your trend, to some degree, but and just being willing to really take and suffer more pain in the markets and more volatility, because that's what you have to do to get the long-term trends that is available for anyone. The shorter-term space is highly competitive.
I'm reminded of the idea of being able to embrace risk in a winter, right? A little bit of a pullback or adding to a position that's in your favor, right? Ultimately, not necessarily always. I feel like when we're in a position, we kind of start thinking about where should we get out immediately. And one of the greater traders or better traders I have ever worked with talked about more kind of thinking about where should you add to the position, not necessarily where should you be looking to pare it back some. Jerry Parker joining us this morning, talk trends in the marketplace right now, CEO of Chesapeake Capital, and words of wisdom, to say the least.